Welcome back to the Dividend Diplomat's YouTube channel. You've got your boy Bert, the Hurt in the flesh, and you know you're rolling with Lanny, the Dividend Diplomats, the Wolf Pack. Bert's showing off this fresh swag here. Nice cotton, man. Touching that.
Oh, here we got the crew neck version if you don't want the hood there.
Guys,
the coffee mug, stay warm.
Christmas is just a few days away. You can get expedited shipping.
Stay warm.
To bring your loved ones, not just Dividend Diplomat swag, but a little taste of financial freedom to help motivate them on their new year of 2022.
That's exactly right. But today, what we're going to be doing, now that we've got a lot of this, some of the swag, take the time shop while we're listening to this video, we are about to feature a massively undervalued dividend growth stock to buy.
We have to go into it, but before we do, smash that subscribe button, give that video a thumbs up. Christmas is here, it's around the corner, a couple days away. Santa Diplomat's here to bring you an undervalued dividend stock on the Christmas wish list. And today, Bert, we got to talk about this high flying, portfolio wheeling, girl stealing, what we dissing, the stock is kissing my portfolio here. We're talking about Lionel Basel, ticker symbol LYB.
Dividend trains will top on there, everybody, because this is a high yielding stock with some insane dividend metrics that we are going to walk through in this video. But what is the funniest thing about Lionel Basel, even though it's down year to date, it's yielded high, the results speak for themselves and they are absolutely crushing it from a top and bottom line perspective.
Now, we love dividend investing in dividend growth stocks because we think it's the best form of passive income on that journey to financial freedom or just to create an additional source of income. For those that don't know, Lionel Basel, they're a big multinational company. They're one of the largest licensors of, I'm going to probably pronounce this wrong, but polyethylene and polypropylene, technologies.
It's like the joke my wife has with me. She'll just have me start saying the names of generic medications and just watching me stumble through it.
In the end, they're a huge chemical company, really competing against Dow and DuPont.
High barriers to entry industry. You're not just going to spin up a company to compete with Lionel Basel and sell to some of their major corporations, the competitors, the way that they do. So that's why we like these companies. They're cash flow giants. They pump out not just gas, not just chemicals. They pump out earnings, revenue. It's fantastic.
So Bert, you mentioned that they just continue to tear up results. So what happened in Q3? You want to give us some high-level bullet points?
Yeah, let's start with the top line here. Their revenue was $12.7 billion, just up 87.3% compared to the same reporting period last year. That beat the expectations on the market by $1.34 billion. Top line, crushed it.
Wow.
Bottom line, though, slightly different, and this is why the stock price tumbled. The big headline is they missed their EPS by 48 cents. Okay, they missed the non-GAAP EPS by 48 cents, but their non-GAAP EPS was $5.25 per share. It's not like they had a net loss during the period. It's not like they barely had net income. Not like they barely earned anything. They still earned over $5 per share non-GAAP EPS. It's insane.
$5 per share. You just can quickly annualize that out over 4 quarters. We're talking about $20 in EPS.
Yeah. So, okay, it missed, but they still earned a boatload of money during the period.
Net income is very strong. Again, revenue growth is very strong. And then back in May of 2021, again, rewind the tapes about 7 months ago. What else did they do, Bert?
Small 7.6% dividend increase. Obviously, I'm kidding, because that's a great...
Hey, you take it easy.
It's a great dividend growth rate, especially when you consider the dividend yield that we're going to talk about a little bit later in the video.
Wow. So strong results. And you'll notice when we do an EPS projection, we're going to use the more conservative, lower estimate from the analyst just to paint a more conservative picture on LYB.
Yeah. So, I mean, again, one of the largest chemical, massive company in their own right. Revenue's fantastic, crushing it. Earnings, missed estimates, still crushed it though. And they had that big dividend increase in 2021. So So how's the stock price doing here? For the stock price, how is the market overall reacting to this news? Year to date, their stock price is down 1.71%. 52 weeks, they're down 3.49%.
So what you're saying is they're lagging the S&P 500, which is up over 18% year to date. And Bert, now before we dive into the metrics, what are those 3 stock screener tools that we use?
PE ratio less than the S&P 500, payout ratio less than 60%. Although that perfect payout ratio is 40 to 60%. We look at the dividend growth history, where we look at the 5-year average dividend growth rate and how many years they have increased that dividend. And then we throw in the bonus metric after the first 3 of the dividend yield. Ready to dive in?
Let's dive in, guys. This is Lionel Basil, ticker symbol LYB. Again, in case you haven't, written it down or taken note of it. We have talked about this company many times, but again, you'll see the metrics and you'll see why this is on the Dividend Diplomat Stock watch list just in time for Christmas. At the close of business on the 17th, they're trading at $87.76. Our conservative analyst estimate right now is $15.29.
You heard that right. EPS 15.29.
Yeah.
Remember, their EPS in their last quarter was $5.25. So imagine how conservative this is. This is below the annualized amount by 25%.
So when you calculate the ratio of stock price over that earnings estimate going forward, that P/E ratio is 5.74.
Good thing I wasn't sipping on my coffee when we talked about that P/E ratio, because I probably would have spit it out. Compared to the stock market, the P/E ratio is significantly below. The S&P is between 25 and 30x right now at any given time. The 3 companies on the watch list that I talked about over the weekend were all significantly higher than LYB here.
Now, to get into that second Dividend Diplomat stock metric, the payout ratio. Currently, LyondellBasell pays on a quarterly basis $1.13 per share, or $4.52 annually. You take that $4.52 by the analyst earning expectations at $15.29, your payout ratio is only 30%.
Out of the park. Phenomenal. I mean, what more is there really to say? Plenty of room to keep growing that dividend going forward, and that's what we ultimately care about here. Third metric, that 5-year dividend growth rate is 5.92%. So their last dividend increase of 7.6% was a lot higher here than their average dividend growth rate.
And that's partly because in 2020, during the pandemic, though the total dividend they paid out in 2020 was higher than 2019, they actually did not announce that dividend increase because of the pandemic. So when you calculate that 5-year growth rate average, that's also including a year of
goose
0.
eggs. And they've increased that dividend for 7+ consecutive years.
Yep. And then Bert, to get into that bonus metric, again, this is where the dividend investors and all the investors right now are looking at LyondellBasell, because that current dividend yield is over 5.15%. So you're getting paid now, plus your income's growing at an above average rate.
And revenue's growing, earnings are growing, a very high mark. Payout ratio is low, strong dividend growth record, and a 5% yield. That's just a cherry on top right there.
Guys, LyondellBasell, to sum it up right now with the metrics, P/E ratio is below 6. The dividend payout ratio is below 30%. Dividend growth for 7+ years at 6%, with the dividend yield above 5%.
Amazing.
What do you think about LyondellBasell?
Maybe the end of 2021, 2022 is time to start growing my position in LyondellBasell. I've been hesitant to add new positions to my portfolio because we track a lot of stocks, we go through it, but it's just I haven't typically bought this company. I've stayed away from the sector, but the metrics are screaming at me right now, and it's just grabbing me by the collar here and saying, buy me. So it might be time to at least start initiating a position.
Buy.
Yeah, maybe start dabbling with 2-3 shares with the goal to build it up to 10 to 15 shares over the next few months.
And I actually own over 89 shares, which is a lot. They actually pay me over $100 per quarter right now.
Are you getting it to 100, Lanny?
Yeah, give this video a thumbs up if you want me to get to 100. If we get over 300 likes on this video, I will get to 100.
Well,
shares.
How do I hit the like button here below this? Because I want Lanny to get to 100 shares.
Guys,
looking down,
give me some likes. Hits 300. I will show you the screenshot of me buying the additional 11 shares to get to 100 shares of LyondellBasell. You heard it here.
I feel like you're selling out too low with 300 likes. At least go for like 500.
Well, let's see.
I'm kidding. I'm messing
guys,
with everybody. Help us out to make this a no-brainer no matter what.
That's all up to you guys.
So everybody, let us know what you think of Lionel Basel. And if you're not watching them, what other dividend stocks on your radar that are crushing it in the Dividend Diplomat Stock Screener like LYB?
Guys, there it is, a great undervalued dividend stock to buy right now, paying you with a solid current dividend yield as well as a solid forward, dividend growth rate. Guys, we had another editing small glitch. That means we had to come back on here just for you guys to finish off this video. That was a high dividend yielding dividend growth stock to buy as we head into Christmas and the holidays. If you haven't already, definitely subscribe to this channel. Give the video a thumbs up. We are here to keep bringing you the content. For any other parting words?
No, everybody, let's keep putting our cash to work, taking it off the sidelines, and buying those income-producing assets. That's what it's all about.
That's what it's all about. That was Bert, the Hurt, and Laney from the Dividend Diplomats. Over and out.